Now, from the movements in the equity and foreign exchange markets, we turn you over now to see the bigger picture, to see how global economic trends are shaping local markets and investments. Now, leading the discussion on this is the CEO of Philippine one of the leaders in the Philippine investment landscape. We have Angel Pacis. She is the CEO of AIA Investment Management. Angel, we've got some tech issues, but thank you for being here with us. Lots of things going on. The biggest thing so far was the U.S. Federal Reserve recently signaling leaner interest rate cuts moving forward. Now, as a knee-jerk reaction, the PSE index tanked earlier this week, lower by 2.4% in a single session. What are the implications that these leaner cuts are going to have on our local market? I mean, off the bat, the BSP is going to have to recalibrate its own decisions on monetary policy, and this is going to affect the currency, see some depreciation there, and second round effects on inflation. What are your thoughts on this? We want to know the bigger picture from you.
Okay, so the market is always moving on expectations, right? So from last year, after hopes of, let's say, as much as 4 rate cuts, it's going to be a lot less. So that this disappointment is actually going to impact the market. And of course, the trajectory of growth that we were expecting will have to slow down a bit. If not, while it will still be good on the back of the recovery of the consumer from the, we had several wage hikes, allowing our consumer to catch up with inflation. I mean, the disappointment is still going to impact, it's still going to impact in the near term.
Mm-hmm. You say we're going to have to slow down a bit. What exactly do you mean by that, Angel?
Oh, well, last year when everybody was talking about 4 rate cuts, the projection is between 6 to 8%, right? Above 6%. A lot of the research houses are now calling for something less, a little below 6%.
Okay, now what impact do you think that's going to have on the peso? We're hovering at 60 to the greenback. What's your outlook for the local currency, given the expectations of leaner rate cuts by the Federal Reserve, and given how the BSP is going to have to recalibrate their own moves to account for this?
Okay, so of course, if the interest rates in the U.S. remain high, right, that increases the attractiveness of the U.S. But of course, everybody's talking about U.S. exceptionalism. What does that mean? The economy is going to be hold up better than the rest of the world. And that's actually going to attract money, and that means a possible depreciation of your peso. So a lot of things are moving, but the technicals are saying that, you maybe over the next 6 months, you'll probably test 59 again, and if we do break 59, that could go on a protracted uptrend to about 64. What do you need to watch out for? Look at where the 10-year U.S. Treasury is going.
Ouch for sovereign debt. Latest data from the Bureau of Treasury revealed that the government's total outstanding debt as of November 2024 was up 0.4% month on month. That doesn't seem like a big of an increase, but when you're talking about this kind of money, that translates to 7.7 billion pesos. Now, that's a month-on-month increase by 7.7 billion pesos, which brings our sovereign debt to a new high of 16.1 trillion pesos. Now, this was also largely on the back of weakness in the peso, which bloated our foreign-denominated currency liabilities. Are you worried about the government's ability to pay for this? And a lot of this debt was because of infrastructure spending, and a lot of it was because of the COVID pandemic. So it wasn't just us. The whole world had to respond by increasing their own debt levels. Where does the Philippines stand, relatively speaking?
Okay. Debt to GDP is actually one of the lowest for the Philippines. As you remember, we were being criticized during the pandemic because we were one of the few who didn't go all out and spend, and we actually protected our fiscal position. Honestly, I'm not really worried. Earlier, you announced that there's an improvement in the revenue collection, and for all intents and purposes, the government has signaled that they will prioritize fiscal sustainability. So they actually have a good handle on the increasing debt and the ability to service it. So it's all moving according to program.
Okay, speaking of according to program, taking a look at the numbers, where does the Philippines stand and how does it affect your outlook for 2025? What are your expectations for inflation, for GDP, for monetary policy, for the balance of 2025? I mean, we've just gotten into it, but what are your projections?
Okay, so let's bifurcate a bit, right? Where if you're going to look at the real economy, we believe will be okay in the sense that as I've said, consumer spending, which is roughly 70% of your economy, will recover because we've had a series of wage hikes, and of course, rice prices have gone down. So for the bigger chunk of the Philippine population, uh, rice is actually 30% of the consumption basket. So with rice prices falling, they have more to spend, right? So it's actually going to be good real economy wise. Now, financial markets wise, it will still be good over a 12-month period. But if you, especially on the back of very low valuations, now what we need to watch out for is that, there's a lot of uncertainty in the near term. So what we are seeing is really you're going to see a lot of volatility in between. And I hope investors will look at that volatility as an opportunity of a lifetime.
Opportunities of a lifetime. Okay, what are the opportunities, not the one within our lifetime, but within 2025? Right now, the PSE index is up by 1.2% to 63.73. Back in October, we wouldn't have thought that we would have fallen to this level. What is your outlook for the PSE index now?
Okay, the outlook easily a technical recovery. Well, initially, the first resistance is about back to 6.5, right? But you're really looking at somewhere between 7.7 to 8.4. That's the target. The timing is really just somewhat a little harder to predict. But that's really where you're going. And remember, that's just mean reversion to about 13 times PE because you're very, very low now, right? So a technical rebound could easily bring you to 7.7. So that's the outlook. We are looking at 8.4 as a target for the PSE again, mainly on mean reversion, but in between, that's the big story. And as you know, the president-elect Trump has doubled down again on the tariff rhetoric, and the how the other players will react is going to be a big question mark for the rest of the world.
Yeah, how everyone reacts is going to be a big question mark, right, for the rest of the world. In the meantime, how can investors position themselves? What should they be buying up right now while the market's at the 6,300 level? We're on sale technically.
Yes. So in terms of sector opportunities, over a 12-month period, we still like banks because they're still projecting double-digit lending growth on the back of consumer lending. And as we know, we're very bullish on the prospects of the consumer this year. In the very near term, we actually like services because they are a defensive play. And you have company-specific stories, like maybe the listing of GCash, that's actually providing interest in the telco sector.
All right. Well, that's something to look forward to. More listings and more opportunities to grow and earn. So Angel Pacis, the CEO of AIA Investment Management, thank you so much for sharing your time with us this morning to put things into perspective.
Thank you for having me, Mikey.